One stock just cracked today's top 5 for July 13th. C Limited just got analyst love. New upgrades came out ahead of earnings, and the stock's responding with conviction. But here's the tension. Momentum is white hot right now at levels that historically break and reverse fast. We're going to walk through whether SC is a fresh buy or if you should wait for a better entry point. SC is trading at $111.14 today, up 1.86% on volume, 1.88 times the average. Solid conviction behind the move, but context is critical. This stock is down 44.2% from its 52-week high. That's a massive drawdown from peak. The recovery so far is real, but SC is still nearly halfway in the hole from where it traded before. That matters when you're deciding if this is a reversal or a rally trapped inside a downtrend. RSI is at 74.05. That's overbought territory, meaning short-term sellers could force a pullback, though momentum can stay extended if the thesis holds. The moving averages tell the real story. Price is above the 50-day at $91.19, which is bullish, but below the 200-day at $116.55. That 200-day is acting as overhead resistance and matches your first profit target. Support sits at $80.80. The line that, if broken, signals this recovery is fake. Resistance is $115.72, right on the daily pivot. Earnings are your timing wildcard. Analyst upgrades typically run ahead of earnings beats, which means the street is already positioning for good news, and upside surprise is now harder to come by because expectations are raised. The upgrade is bullish short term, but it raises the bar for delivery. If SC misses or guides lower, gains evaporate fast. Position size accordingly. Roman 4 at 0.7803 signals elevated vol. The market is pricing earnings risk, so option premiums are juiced. The put-to-call ratio is 0.377. For every dollar bet on SC falling, $2 are bet on it rising, which is extremely bullish options positioning. This tells you smart money is net long and expects more upside. But paired with the overbought RSI, this is the classic red flag. Everyone agrees the stock should go up. Sometimes that means there's no one left to buy, and the next shock is a reversal. The verdict is watch with moderate conviction. Direction up. Don't chase at $111.14. RSI is too hot. Your entry zone is $103 to $106.09. If SC pulls back to that level, that's your trigger. Stop loss is $95.76. Firm. Targets are $115.72 for T1 immediate resistance, $116.55 for T2 the 200-day, and $135.60 for T3 long-term upside. If recovery accelerates, risk-reward is 0.3. Tight, so position small and only go here if conviction rises too high. SE is in recovery mode with fresh analyst love, but momentum is already extended and price is still 44% below the 52-week high. The bull case is intact, just not at this price. Wait for the pullback into your entry zone, keep your stop tight, and let earnings prove the thesis. If SC reverses and breaks below support at $80.80, this recovery is a trap and you're out without question.